Hey everybody, this is Sean Riley with Riley Real Estate and MassHomesale.com with this week's Q&A Saturday video. First off, sorry that we missed last week. My two little princesses had their annual dance recital on Saturday, so I kind of knew I wasn't going to be able to do it then. I thought I was going to get to it Sunday, but other friends and family commitments came up, and by the time Sunday night rolled around, it didn't seem to make sense to try to do one last week. So sorry about that, but we're back and ready to go this week. So this week we're going to answer the question of what is an assumable mortgage. We've talked a lot about different types of seller financing. One of the ones we specifically talked about, or two of the things we talked about in previous videos, were subject to financing as well as wraparound mortgages, which is essentially subject to financing with additional monies being transferred via some other type of seller finance mortgage generally. The big difference between subject to and the associated wraparound mortgages and an assumable mortgage is that doing a subject to type deal is you do not actually formally assume the mortgage and go through a qualification process, and the seller does not lose responsibility for the mortgage. With an assumable mortgage, the buyer actually goes to the bank, applies to assume the mortgage, and goes through a qualification process. And if it's accepted, the seller actually is no longer part of the mortgage anymore and has no further responsibility. It's just as if a new mortgage was originated. It's just that the buyer just takes over their mortgage as opposed to getting a new one. So that's what an assumable mortgage is, and that's the key difference between an assumable mortgage and a subject to is the qualification. So some of the advantages of an assumable mortgage, a lot of them are similar to buying a place subject to, except for the big thing for the seller is, again, immediately no longer being responsible for the mortgage and having it off their credit report right away. For the buyer, there's no particular advantage for an assumable mortgage over doing it subject to. The reason to do it would be to protect the seller more, which, as a responsible buyer, is something that I want to take into account when making a purchase. If there's something I actually could assume versus just taking it subject to, I probably would seriously consider doing that because it does protect my sellers. Now, the rub here is that, well, I guess, so just talk about the disadvantages. As I said, I don't see there's really any particular disadvantage to a seller. The main advantages over a subject to, like I said, is getting off the mortgage. But in general, doing a assumable mortgage is sort of it could be a marketing technique. If you have a mortgage that could be assumed, it should be slightly less paperwork and slightly easier to qualify to assume a mortgage than it would be to qualify for a new mortgage, but really not that big of a difference. So it's not a big draw for people who just are going to have a hard time qualifying. So it's not a huge advantage that way. Like I said, it's only really an advantage for somebody who might be looking or open to doing a subject to type deal. For the buyers, like I said, there's no particular advantage, and obviously the big disadvantage is now you are actually responsible for the mortgage, as opposed to a subject to where technically if you default, it doesn't hurt your credit, it hurts the seller's credit. That's a terrible way to do business, and you should never do that. If for some reason you are not going to be able to continue with the payments, you go back to the previous seller and work out whatever you can to make sure that they don't get hurt by that. But it is safer in that way to do it at subject to. So the other thing with assumable mortgages, basically almost none are. Well, I shouldn't say that a lot of them are, but only really two specific types are good candidates for an assumption. Those are FHA and VA loans. Pretty much anything originated through a private lender that isn't associated with one of those two programs, they're not even going to consider doing an assumption. It was pretty common to do assumptions back in the prior to the early 1980s. It was a pretty common way of doing stuff. But the reason it was popular back then is because you had very high double-digit interest rates, and people were assuming mortgages that were half of that. And banks realized that they were losing a lot of potential profits, so they started inserting the due-on-sale clause, which is another video we've done before, which we'll link to below, which basically gave them the right to call any mortgage that they had on a place if the place was sold and they weren't paid off. Now, as we discussed in that video, they have the right but not the obligation to do that. So sometimes they do, many times, as long as the payments are being made, they don't. But there's the risk there. And they also generally just will not consider an assumption because it's not worth the time and effort on their part either, frankly. So FHA and VA are the only ones that are typically can still be done, but you still have to go through a qualifying process. Again, used to be back in the 80s and before, you could assume these mortgages basically just by filling out an application and paying a small fee without too much else going on. Even that changed, so they're still assumable, but you do have to go through the qualification process. Really old ones could still be assumed that way, but that's, I think they had to be originated prior to sometime in 1988. So essentially, there's none available because it has to be that original mortgage. So if you have a 30-year mortgage that's 28 years old, there's really not going to be much point in trying to do an assumption on that, even if you don't have to go through any kind of qualifying process, because it's going to be, the balance is going to be so low. If you only have 2 years left to play on it, it's probably not worth it. Plus, frankly, the interest rates back in the mid-80s are far higher than what they are now, so there's really no advantage to taking on that interest rate as either. So essentially, there's not much of a market for assumable mortgages. Different people work different things and can come up with different stuff, but for the most part, sellers can't really sell places with assumable mortgages, and there's not that many people who would want to or could buy a place via an assumable mortgage. Again, this used to be very common practice. My parents, back in the mid-70s, actually bought the house that I grew up in by assuming a VA mortgage on the house that they were buying. So, I have personal experience with that. Very common back then, but not anymore. So while it is possible, in practicality, it's really not a good investing strategy for sure, and not particularly a good house buying or house selling strategy even on the retail market. Again, different people will tell you different things. It might be worth pursuing. It's, like I said, most likely only going to work with VA or FHA loans. But if you're working with a retail person who's familiar with these kind of things, maybe they can work something out for you, and maybe it is a good deal. For the most part, it's just not something that happens very often. Again, this sort of kind of wraps up a lot of the different seller financing strategies that we've discussed before. So we will link to all of the stuff, especially about the subject to wrap mortgages, due on sale clause stuff, but also our stuff just on general seller financing, as well as like lease options and stuff like that below. And if you have any questions about assumable mortgages or any of that other seller financing stuff, make sure to leave a comment below. If you have a place that you're interested in selling with seller financing, obviously get in touch with us below, or in any other way you want. And as always, if you have a question you'd like to see answered in a future video, you can leave a comment below, fill out a form on the website, put something on our Facebook page or Twitter account, or send an email to info@masshomesale.com. And I will see you guys next week. All right? Bye-bye.